Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, August 28th, 2008. Well, really a fascinating day on Wall Street today, especially considering it's the day before the long weekend here in the United States. And what we did see today were some fascinating aspects based on oil, Gustav, which is a hurricane heading into the Gulf of Mexico, which could affect oil, and also some issues with GDP, which came in better than expected when it was reported this morning. And the market overall, especially financials, really ripped up today. We're going to look at a couple key financial stocks today, like MBIA, ABK, Freddie, Fannie, you name it. They were all off to the races today in a tremendous move. And the market on light volume again continued higher today. And I will caution you guys out there to be a little careful here. All right, we've mentioned how we're staying in this neutral stance over the next couple days, really till next Tuesday, when we start to analyze the market anew once the volume comes back into this market. But anytime you have a move up on light volume, you have to take it with a grain of salt. Okay, and that's the basics of anyone trading out there. You want to be careful on light volume. Because light volume, it's true, it is volume. It's actual volume. There's actual buying in this market. But it takes a lot less players in the market to push a market in any direction. And anytime you have a move up like this, which has been a relatively significant move, the Dow was up 212 today, the Nasdaq was up 29 points, and the S&P was up 19. Anytime you have a light volume push, what happens when the traders come back next week and the heavy volume sets in? Are they still going to want to push this market up any higher, or maybe sell a little bit into this? Because the financial issues out there, folks, we've seen some huge rallies in financials over the last couple days, especially Freddie and Fannie Mae. It's not over yet, and I want to caution us. So we still favor the upside going into mid-September, and I'm going to kind of, as we get into next week, we'll isolate key turn dates into that mid to late September turn date area. But we still favor the upside, but it doesn't mean we're not going to have a pullback here for a day or two, maybe on the horizon. So keep it in mind. We're going to still stay neutral because we have to, based on light volume. That's the smart move to do. But would we be shocked to see a little bit of a pullback? No, absolutely not. So keep that in mind, folks. Continued with the neutral stance, but after a light volume push up over the next day or two of trading, whether it's Friday or next Tuesday here in the United States, it wouldn't shock us to see a little pullback in the markets. All right, let's get right into the analysis part of this video because I want to cover a lot of stuff today. First of all, you can see here that the market really just trended up all day on light volume, and this is very, very light volume. We're really talking about 1.4 to 1.5 million contracts again on the ES futures, and again, we are looking at the ESU8 September '08 E-mini S&P 500 contract here. And again, you can see the trend line. The trend line's held again today, and I pointed this out yesterday. On a light volume, the trend line seemed to just buoy it up. And you can see that, a little push here, consolidation, consolidation, a little push here, consolidation here, always staying above the 20 moving average. Another push up here, staying above but consolidating, and then just a trickle up pretty much the rest of the day, closing near the highs of the day. All right, so again, you had the Dow up about 212 points and the Nasdaq up about 29. Now, the key here, folks, is going to the daily charts to reanalyze things and getting a sense of it. But let's talk a little bit about the storm in the Gulf first and what's going on here today. Because we had GDP this morning, all right, and you can see the GDP number came out right here on the futures. And all of a sudden, you saw a blast-off effect, and it really just added to it all day as oil started to collapse. Now, natural gas inventories came out at 10:35 a.m. Eastern Time today, and they came in with a higher build than expected, and the natural gas just dropped. Look at this drop here on the natural gas inventories. Huge drop. You had a little bounce consolidation, another drop, and then finally a little bit of a bounce into the close. But the UNG, which is the ETF for natural gas, just got decimated today. All right, the USO, same general trend. You can see it a little more here, dumping all the way out into the, really about the 11:30 to 12 o'clock time frame, then getting a bounce the rest of the day and trending back up. But this rate, basically what was going on today, folks, is that you had Gustav, which was estimated at a Category 3 to Category 4 when it hits the Gulf rigs, down in Louisiana, Texas area, basically now is looking at a Category 2 to Category 3. So just that alone is a big difference for those rigs and them being able to hold up against such winds and a storm like that. So that's why you saw the big decline. Now, the question is that the truth? That's what the expectations are. Does it actually happen? Because you have the storm, come in stronger than expected now as expectations are getting lowered. And by the way, analysis of storms is exactly the same as charts. All right, you have expectations, and if they're met, then it stays the same or sell on the news. If it's greater, it causes a reaction, and vice versa on the low side. So it's the same thing. You can analyze anything in life that way. Everything has a trend, everything can have a breakdown, and so forth. And it's really a fascinating thing about the technical analysis side, how it can be applied to anything in life. All right, so keep that in mind. That's what went on with oil. You had the GDP number coming in, causing a major reaction to the upside. You add in light volume today, and the financials like MBI. And by the way, look at this MBI today. MBI up $4.17 today on the daily. Look at this blast-off effect. Up $4.17 to $16.15 today. That's like a 30% move. ABK, AMBAC, up huge today. You're talking about almost a 40% move here on AMBAC, ABK. Unbelievable move. Merrill Lynch today, huge move on Merrill Lynch, up $2.25. Lehman, you name it, the financials were roaring. Let's look at the XLF. Here's the XLF's daily chart. You can see you're piercing the key moving average resistance points, and we did our analysis yesterday on the XLF along with the NASDAQ and the SPY, and you can see right here that the key resistance levels that we had talked about were now punctured to the upside. You have the 20 moving average and the 50, which were the first line of weak resistance, and we leveled it out as two levels of resistance. You have the weak one and then the heavy one, and the weak one got punctured today to the upside as the market moved above the 20 and the 50. Now we have to see whether or not it can hold, because in the light volume, again, you have to be cautious. I always trade so much more cautiously on these pre-vacation holiday sessions because of the whipsaw nature of the market. All right, so beware of that. Be aware very, very closely of that. All right, so just doing a little analysis on this chart quickly, folks. You can see the support line continues to be this right here, which we pointed out in yesterday's video. First resistance we had talked about yesterday was right here. Got punctured today to the upside. The mega resistance on this is obviously right around here. Now, the key in this chart, guys, and I want to show a couple different charts, and I'm going to flip through them. Let's first look at Fannie Mae. Fannie Mae hit the 20 moving average today. Right here's the daily Fannie Mae. You can see this, right? Freddie Mac, FRE, hit the 20 as well. Now, this is going to be near-term resistance, and this is why I'm sending out a little bit of a caution flag here, just to be aware. Now, it doesn't mean it's necessarily going to happen tomorrow. There could be another little push on light volume, but I just want to be cautious on this. Merrill Lynch is approaching its 50 moving average. It has a little more to go. Now, let's look at the SKF, which is the 2 times short, the financials. It's coming down to rest on key support now. And you can see how the charts are equaling each other. So a short financials ETF, 2 times short actually, is on support, while the Freddie and Fannie charts are hitting resistance on the upside. So you can see a lot of things coming into alignment here where we're at a key level on these financials. And I want to repeat that. We are at a key level on these financials. All right, key resistance on the upside in these things. The XLF, which I just showed, we obviously saw that. It's key resistance right into that. Now, do we reverse tomorrow or do we continue higher? If we can establish ourselves above this on a nice move tomorrow, well, then maybe we can consolidate and move to the upside in the following week or so. And we'll watch for that as well. All right, so very, very interesting charts here on the financials, as it seems that we're at a precipice of kind of staying above and continuing up the mountain, or falling off the cliff and coming back in a little bit. And we'll have to watch tomorrow's action and next Tuesday's action to really figure that out. Okay, now let's look at the SPY to get the overall market, all right? Now, number one, we can just refresh ourselves with the chart here. Here's the trend line that we had talked about, the breakdown that never confirmed, which was support right there. You had the 3-day move up now on the SPY. We've moved above the key moving average points, but we're right into this resistance. Remember, support broken to the downside becomes resistance to the upside. So you're also facing a little bit of resistance here on the upside at this point. In addition, draw your lines across here, guys. Simple trend line analysis. You're seeing a double resistance point coming right up here on the SPY, which also leads me to believe, even though we are staying in the neutral position, that there could be a little bit of downside in this market on the horizon. Okay. Now, again, I want to repeat that the light volume tomorrow, it is going to be one of the lightest days of the year tomorrow in volume, and you have to just say, okay, disregard, let's wait till we get to next week. But keep in mind, this level is very, very key here. If we break out, we could be in for a sizable rally over the next 2 weeks. If we can't, you could be seeing another move to possibly the low end of this range down in this point. All right, so definitely some key stuff out there. Quickly looking at the NASDAQ, guys. NASDAQ at key resistance as well. Note this, all right? Again, another chart that's showing us on the upside that we're muted here, and we have to break out. Again, a precipice, possible cliff, where we either are going to continue up the mountain or fall back down right here. You have the 200 moving average, and let me move that back into focus. Right here, the 200 moving average we hit again. And this is a key resistance line. Obviously, the 200 is the mega resistance line of them all on the daily charts. Key support right here, maintaining this key support. There's also a minor support line right here at the 20 moving average, obvious to see right there. But again, here's the main one right down here, right into this 50 moving average. The mega resistance level, which we're up against now, is the 200 moving average right here on the charts. So again, a lot of these charts are showing that we are at a key level. And we're going to watch tomorrow's action, but not really pay too much attention until we get more volume in this market next week. If we can get above, let's consolidate. If we don't, look for a retest of the support lines down here, and we'll retest those and analyze it. All right, folks, enough of that today. The dollar was slightly stronger, and I just want to show you this quickly on the daily. Note the dollar chart still at resistance here. It hasn't been able to break out. Watch for a possible breakout on that or a fall back down. You'll have support down here at the gap fill and at the 20 moving average right up here. All right, folks, have a wonderful day. We'll talk to you all tomorrow. Take care.